I'm Chelsea from the research department, and I'll be the moderator for this session. So without further ado, let's dive in. Okay, so in the first session, we will cover the global market review and outlook, the Malaysia market review and outlook, and the market strategy, where Kenneth will discuss all this topic. Then we'll get into our most exciting part, which is our in-house topics and sector in favor, followed by the Q&A session to end our equity part. After the equity part, we will take a short break of 5 minutes for a water break. Then we will return and dive into Megan expertise area, derivatives. After Megan share, we will conduct another Q&A session to close up our session. So, the next one. Hi Kenneth, could you share how's the market performance in 2024?
Global markets were fairly positive in 2024. Most of the markets across global closed positively throughout the year as investors brushed off the political uncertainty across the Middle East, Taiwan, and also Ukraine and Russia. There are several key factors that contribute towards the positive momentum in 2024. Firstly is the anticipated US interest rate cut amid the cooling inflation. Recall that back in 2024, since September, the US Federal Reserve delivered 3 times of rate cuts and a cumulative of 100 basis points. Also, the reported corporate earnings were mostly ahead of expectations, whereby consensus or the analysts have revised their numbers higher respectively. Gains also were mainly driven by the sustained positive global economic growth, while towards the end of the year in last year, gains were also driven by the post-US presidential election rally, whereby following the Trump presidential won election, we did see that US markets reacted very positively towards the end of last year. And also, despite the market has outperformed in last year, we gather that valuations are still fairly attractive as the S&P 500 is trading at prospective PE multiple of 21 times and also about 19 times for 2025 and also 2026 respectively. This is still below the historical 5-year average of around 23 times. On the coming closer to our home, the neighboring markets were also fairly positive or slightly mixed across certain markets, but still considered fairly positive as the weakness across like Jakarta Composite Index and also Stock Exchange of Thailand was close marginally negative by 3% and 1% respectively, while gains on the Philippine Stock Exchange managed to chalk in slightly higher after hovering about mostly positive throughout the 2024. And outperforming the gains across the regional markets was the Singapore Stocks Exchange, which has climbed by close to 17% year on year. On the underperformance wise, we noticed that the South Korea's KOSPI, which fell by about close to 10%, was the biggest underperformer within the Asia Pacific region. This came in after the political uncertainty took place following the South Korean President Yoon Suk Yeol declared emergency martial law in early December 2024. This is the first time where South Korea has declared their emergency martial law since 1976, if I'm not mistaken, or in the 1970s. This chart or this table highlights the selected global indices performance. We notice that Jakarta Composite has fallen by about 3% year on year. This came in after the markets were dragged down by concerns over the planned value-added tax hike from 11% in 2024 to potentially 12% in this year. The stock exchange of Thailand was mainly bogged down by the sluggish economic growth. The country relies heavily onto tourism activities, but we did not see tourism activities flourish in the Thailand economy. The economy was also dragged down by the weak currency performance and also political uncertainties, whereby in the Philippines stock exchange, it was mainly lifted by rate cuts particularly in the second half of last year, lowering corporate tax rate and also reduction in the stocks transaction. On in our neighbor, in Singapore Straits Times Index, it has outperformed by 17% year on year in last year. This came in after the Monetary Authority of Singapore efforts to boost the markets. For example, like setting up a review group and also the strong GDP growth, whereby in 2024 expected GDP growth in Singapore is at 4%, which is relatively high compared to the historical average. The market is also in favor as a defensive play in view of uncertainties. On the FMKLCIY, we did see the FMKLCI also outperformed by about 13%. This gain we haven't seen this gain since I think quite some time ago, except for the recovery during the COVID year. The key index performance was mainly lifted by the resilient GDP growth. Currently in the 9 months, GDP growth in Malaysia is at 5.2%, stable political situation and also attractive valuations. The Nikkei 225 also outperformed. This was mainly driven by the higher wages that supports domestic consumption, with the Bank of Japan looking to end their long-standing zero-rate interest rate policy in sometime towards mid of this year. Like we have mentioned, the South Korea's Kospi has underperformed. This is dragged down by the political turmoil.
So following the strong performance delivered by the Malaysian market, can we expect the positivity to sustain moving forward into second half of the year?
For now, for the outlook wise, we think that the global markets will remain fairly upbeat moving into 2025. This is likely to be driven by the easier monetary policy, sustained corporate earnings growth, relatively stable consumer purchasing power, and also I think political uncertainty are also taking a backseat, particularly towards the recent months. So expectations of improved corporate earnings remains on the table, whereby globally on the MSCI All World Index, forward earnings are projected to grow by about close to 10% year on year in 2025. So these are the factors that may likely to drive the markets higher moving into 2025. However, we do caution that the Trump presidency 2.0 may bring about renewed volatility towards the global markets. Key focus lies into the measure towards the tariffs in 2025. So we may anticipate, despite markets may likely to much higher, we think that movements may likely to be choppy moving forward. Okay. On the next slide wise, this is the performance of the Dow Jones and also the FMKLCI. If you look closely on the chart, on the blue color chart, the blue color line represents the Dow Jones performance. You can see that the Dow Jones performance and the gray color line represents the KLCI performance is traditionally correlates quite positively since the 2017 or so, since end of 2017 towards mid of 2018. But since then, we did see that the FMKLCI starts to tank, but the Dow Jones Index managed to trade just on a sideways. This came in following the change in the government, whereby the Pakatan Harapan led government took government of the control for the first time in more than a few decades. So eventually the FMKLCI has started to stutter, and the FMKLCI has underperformed. So this chart highlights 2018 and also 2019, whereby this was during the Trump presidency 1.0. Recall that Trump took the White House back in 2017, but the tariff was only implemented back in 2018. So in 2018, we did see the US market starts to fluctuate quite wildly, but until 2019, investors' attention has turned back towards the corporate earnings eventually, and with the improvement in the corporate earnings in the US, we did see the US stock markets has subsequently charted higher, but the FMKLCI wise, we did not see the FMKLCI recovers back towards the previous levels. Okay, so like we have mentioned, we think that the focus may likely to shift back towards the corporate earnings growth moving forward. Also recall that in the US market wise, the S&P 500 has delivered positive earnings growth trajectory both in 2018 and also 2019. So moving forward, in terms of rate cut wise, after the US Federal Reserve has delivered about 100 basis points of rate cut, we expect two more rate cuts to be tabled for some time in 2025. Most likely it wouldn't be in the upcoming FOMC meeting towards the end of January, nor even in March. It probably will come in sometime later. However, I think that the Fed will likely to be in a tight position to juggle between the potential rate cuts and also the potential risk of higher inflation in anticipation of the tariff or the trade war escalation between US and China. So this may likely to result in greater inflation.
So moving on to the local market review, I've noticed key index did relatively quite well in 2024, right?
Yes. So basically, the FMKLCI managed to close by about 13% higher year on year in last year. The gains were mainly driven by the positive performance in the first half, but towards the second half of the year, we did see that the FMKLCI, it did still manage to chalk in marginal gains in the second half, but the key index was largely flat throughout the second half of the year until perhaps the final 1 to 2 weeks trading weeks of the year. We did see the usual year-end window dressing activities prop the FMKLCI slightly higher, but before that, the FMKLCI was largely on the sideways, hovering around the 1600 psychological level. So by then, the key index performance, particularly in the second half, was relatively capped by the foreign funds outflow. Recall that the Malaysia Equities recorded a foreign outflow of more than 4 billion in 2024, and bulk of it came in after the US presidential election. Post the US presidential election, we gathered that a total of 2.7 billion, which is a large chunk of a total outflow. 2.7 billion flow out from the Malaysia Equities. So consequently, Malaysia Equities recorded the fourth straight year of outflow in 2024. So this graph highlights the movement of the FMKLCI and also the foreign funds. Traditionally, foreign funds movements correlates positively with the FMKLCI performance. For example, when the foreign funds buy into Malaysia Equities, traditionally Malaysia Equities will outperform and vice versa. So if you look at this chart wise, when the FMKLCI starts to recover since the start of the year, we did see there's a balance between the foreign inflow and also outflow until the FMKLCI has peaked whereby in the month of August, when foreign funds has bought a sizable amount in Malaysia Equities. Subsequently, since September last year, we did see the FMKLCI subsequently pull back towards the 1600 level. This came in as the foreign funds has started to dispose of Malaysia equities. But towards the end of last year, we did see the usual year-end window dressing activities, which led to the FMKLCI rising by about 13%. On the FMKLCI wise, we noticed that the notable winners on the key index were largely driven by the data center related companies. as well as the newly inclusion of selected stocks like Sunway and also Gamuda. Sunway and Gamuda has right into the development of a data center, while not only that, the YTL Power, Tenaga, and also YTL Corporation has also outperformed respectively, capitalizing on the AI and also cloud computing industry. On the flip side, we don't notice that the oil and gas heavyweights like your Petronas Chemicals and also Petronas Dagangan has underperformed. This came in after the companies has posted weaker financial performance, concerns over the possible new competitor Saudi Aramco entrance into the Malaysian market. I think recently or recent days, there's news or rumors mentioning that Shell also may likely to sell some of their stakes or operations to Saudi Aramco, and also the potential removal of the blanket subsidies on the petrol that has subsequently delayed to potentially in the mid of this year. We gathered that the consumer products has also taken a slight hit. For example, like Nestle, where the share price has fallen by about 15% year on year in last year. This came in after the financial performance has underperformed following the boycott across several international brands that are deemed associated with Israel. On the market performance wise, trading activities remains fairly buoyant in the 2024. This came in after that Bursa Malaysia has recorded a record high of 55 IPOs launched in last year. This has surpassed the initial target of 42, and what we have gathered that also is that the number of IPOs in Bursa Malaysia is also the highest among the Asian region back in 2024. The part of the strong gains on the local market was also driven by the improved trading liquidity. So average daily traded volumes in 2024 stood at 4 billion. This came in above the 3.2 billion recorded back in 2023, while daily average transacted value advanced to 3.15 billion, which is close to about approximately 50% higher compared to 2 billion back in 2023. So on the next slide, this is the 2024 Bursa Malaysia sectoral performance. Leading the pack was the construction sector, which has climbed by about 60.7%, followed by the utility sector rising by close to 40%. The property index also outperformed by about more than 30% in last year. So these three indices came in following the influx of DC related projects that has propped the respective share prices higher. So consequently, we expect the markets to likely to see similar performance moving into 2025, but we may not replicate a similar movement. On the flip side wise, we noticed that the telco sector has underperformed by about 4.4%. This came in due to the intensified competition within the sector, whereby the average revenue per user continues to decline. Following the rising cost of living, most of the consumers are switching to cheaper plans. So this has resulted in the lower average revenue per user. In terms of the outlook wise, we gather that the Malaysian markets may likely to build onto the 2024 gains. The FMKSM managed to chart higher above the 1600, and in recent days we did see some mild pullback took shape, but I think on yesterday the key index managed to defend the 1600. So long I think if the FMKSM can hover above the 1600 level, then we expect further gains to come by. So we think that gains may likely to be supported by the prospects of the improving economic growth. We expect GDP numbers to hover at mid-single digit level for the Malaysia economy in 2025. Better corporate fundamentals We expect the FMKLCI components to deliver approximately about close to 10% of year-on-year corporate earnings growth. These two are the key factors that may likely to drive the Malaysia markets higher. However, we do caution that the potential implication of the 195 blanket subsidy removal may likely to be likely to see some volatility, or may likely to result in some negativity or volatility across stocks on Bursa Malaysia. For now, investors will likely to turn their attention to see how this implementation will likely to take place. In terms of the foreign funds movement wise, the narrowing interest rate differential between the US and also Malaysia, whereby we expect Bank Negara to stay pat onto their interest rate decision at 3% throughout the year, whereby we expect a 2 rate cut for the from the US Federal Reserve. So the narrowing yield differential will likely to keep the foreign funds outflow in check as well. Also, with the expectation of corporate earnings growth, valuation remains fairly positive, fairly decent. This may likely to attract the foreign funds back into the Malaysia equities. However, the potential tariff implications will likely to cap any further inflow back into Malaysia equities. So moving forward, investors also will be monitoring over the tabling of the 13th Malaysia Plan. As we move into the final year of the 12th Malaysia Plan, which is this year, the sustained development expenditure will continue to buoy the construction activities and in turn remain supportive towards the nation's economic growth. The 13th Malaysia Plan will likely to be tabled sometime in the third quarter of this year. We should likely to focus on several key themes. We expect the focus will likely to be inclusivity, improving prosperity, empowering human capital development, environment sustainability, and among others. So for now, we are keeping our investment or preference skewed towards selective sectors that could demonstrate resiliency, particularly in earnings, as well as sectors riding into selected thematic plays. Based on current juncture at around the 1600 level, we gathered that the FMKLCI valuations remains fairly attractive, trading as prospective PE multiples of 14.2 times and 13.1 times for this year and next year respectively. This is vis-a-vis the 5-year historical mean average of 16.7 times, implying that there could be potential upside in our view. So we think that we reckon that bargain hunting activities may likely to take place should there be any volatility or any weakness to take place. So any pullback on the Malaysian stock markets, we think that this could be a good opportunity for investors to bargain hunt onto beaten down stocks. Moving on to the economic review wise, we are keeping our 2024 Malaysia GDP growth forecast at 5.2% year-on-year, as well as 2025 projection at 4.6% year-on-year. We think that future growth will remain fairly resilient and largely supported by the stronger domestic spending, stable market conditions with unemployment hovering at the multi-year low at around the 3% level, the progressive income growth that is supported by government-led policy measures, execution of multi-year projects from approved investment, as well as the recovery in tourism spending ahead of the Visit Malaysia year 2026. In terms of numbers wise, we are projecting the both headline inflation and core inflation to be slightly higher at 2.6% and 2.4% respectively. This is taking into account of the removal of the 195 blanket subsidy that is anticipated to take place sometime in the middle of this year, as well as the removal of subsidy for chicken eggs, which is currently being reviewed by the ministry at current moment. We expect the US dollar to remain strengthened. The dollar index is on the rising trend as of late as well. This followed the trade protectionism act from the US presidential-elect Donald Trump to safeguard the strength of the US dollar against major currencies, including the Malaysian ringgit as well. as we project, despite we are projecting another 2 rate cuts in 2025. We expect the Bank Negara to hold the rates to steady at 3% given that economic numbers remains fairly stable at this current moment. Inflation also remains fairly tame or fairly manageable at this point of time. So I think there's no reason that Bank Negara may likely to raise their rates at this point of time. So with the narrowing use differential between the US and so Malaysia, we expect the ringgit to see some mild strengthening, but maybe in the first half or the first 9 months of the year, we may be seeing some volatility as the tariff take place between US and China, but since post that we expect some stability to take place, and the ringgit may likely to see some recovery towards the 435 by end of this year. In terms of the implication of the trade balance, recall back in 2018 or 2017, when in 2017 when Trump took place, the tariff hasn't been taken effect yet until 2018. So if you look at recall on this chart wise, we think that the tariff may likely to be more favorable towards the Malaysia trade activities, riding onto the trade diversion or the China plus one strategy, as businesses from China navigates their business or navigates their supply chain out of China into other parts of the region. So if you look onto this table wise, when President Trump took place, this is the US data. So we did see that Malaysia export to the US has risen from 36 to 37 billion, and once the tariff took place in 2018, we did see that the Malaysia economy continues to see improvement in the trade with the US, whereby we continue to export more at close to 39.3 billion, and subsequently in 2019 we did see the numbers continues to rise as well. So we expect a similar pattern to take place moving into 2025 or even 2026, whereby trade activities to the US may likely to continue to flourish as well.
So how should we, like investor, position their portfolio moving into 2025, and what are the key drivers that the market should watch out for?
Okay, in terms of the strategy wise, let me share with you guys. We think that markets may likely to turn volatile moving forward, reacting to any new developments surrounding the tariffs imposed by the US. For example, whenever Trump tweeted and something, then we expect markets will likely to react either positively or negatively towards that. So we expect the 3 T's, for example, Trump, trade and also tariff, to be the new buzzword for the markets moving into this year, replacing inflation, interest rate, and also US election back in 2024. We are focusing on to 5 key themes in the Malaysia markets. In view of the potential volatility arising from the current scenario, we are advocating a more selective investment strategy for 2025. So firstly, will be the construction sector. The construction sector will be anchoring the economic growth through multiple public and private-led projects. Given that the development expenditure remains unchanged under budget 2025, and also the data center concentrated order book replenishment on the local front last year, we expect the speed up of the public infrastructure projects to roll out, particularly in 2025. This could likely to be a boon for the construction sector. Also, recently, the Ministry of Work has also made a press release that the construction sector will likely to be benefiting from the potential rollout or the discharge of the potential total of 200 billion worth of construction projects. It is a combination of a private and also public-led projects. Another sector that we like will be the plantation sector, but this is only for the first half of the year. Given that we are expecting plantation CPO prices to defend or to hover above these 4,000 per metric ton level, particularly in the first half of this year. So with the improvement of the CPO prices, this may likely to transpire to a better corporate earnings growth as well. We expect CPO prices to remain slightly elevated, driven by several key factors such as your potential supply constraints due to the unfavorable weather, tighter export supply from Indonesia that continues to push for higher domestic consumption, and also rising demand from India's restocking activities as well. On another sector wise, we like the technology sector, whereby the semiconductor sales recovery is expected to remain on course moving into 2025. This is likely to lift the technology sector towards a new wave. Already, the semiconductor sales has demonstrated improvement in terms of the numbers since the middle or towards the end of 2023. Heading into 2025 or moving into 2025 wise, as the both semiconductor trade is expecting to grow by about 11% year on year to close to 700 billion. We also like the renewable energy sector, given that there's emphasis continues to skew towards energy transition as the nation aims to achieve the net zero greenhouse gas emission by 2050. Recall that in the past recent budgets, there's a lot of emphasis or a lot of incentives being placed towards the renewable energy sector, such as your like NETR and other policies as well. So lastly, we also like the data center theme. We have been advocating this theme since the first half of last year. So the mushrooming of the data centers will likely to remain steadfast moving into 2024. In 2025, continuing from 2024. We are sanguine onto data center supply chain players such as your utility players, your mechanical engineering specialists, supply chain players, and among others. They will allow you to grab a slice of the pie under the multi-billion investment pouring into the country. Okay, in terms of valuation wise, we think that valuations are still fairly attractive despite the FMKLCI has raked in about 13% year-on-year gain back in last year. For now, forward valuations are still fairly attractive, with the FMKLCI trading at 14 times and 13 times for 2025 and also 2026 respectively, which is still below the 5-year historical mean average of close to 17 times. This implies that there could be potential upside in our view. In terms of our in-house targets wise, we are projecting 2025 year-end target for the FMKLCI to hit 1760. This is a slight upward revision from the 1750 earlier, following some housekeeping after the inclusion of 99 Speedmart Retail Holdings Berhad as well as Gamuda Berhad into the FMKLCI components, replacing the two Genting related companies. We also introduced 2026 numbers, whereby we are expecting FMKLCI year-end 2026 to hit 1810. This is based on 15 times and also 14 times P multiples respectively. We think that potential upsides are largely on the cards, driven by the corporate earnings growth, whereby we are projecting 2025 corporate earnings for the FMKLCI to grow by about 10%. And mainly anchored by the banking, utilities, and plantation heavyweights. Okay, this is the FMKLCI chart in terms of the share price performance and so the valuations. So if you look at the FMKLCI before the or during the COVID times, the FMKLCI has staged a strong bounce and subsequently hovered above the dotted yellow color line, which is the 5-year historical mean average. But since then, since the recovery of the COVID-19, we gathered that the FMKLCI movement has been always hovering below the dotted yellow color line. So this suggests that the FMKLCI may likely to continue to hover the 5-year historical mean average on this will likely to potentially present some potential upside on the FM carousel moving forward. But although the FM carousel may likely to continue to hover below the 5-year historical mean average, we think that upside may likely to present. You can see that the gap between the key index movement and also the in terms of the valuations are expanding over the past, I think, couple of months. So this suggests that the corporate earnings growth remains on the cards, but the key index movement has yet to play catch up towards the corporate earnings growth.
So what's our topic? I think this is the most exciting part for this session, right?
Yes, so I will share some of the topics and also sector recommendations to you guys. First, in terms of this table wise, we are always onto certain sectors such as your banking, construction, industrial, logistics, property, RE, tech, telco, and utilities. We are neutral onto the remaining sectors such as your automotive, consumer gloves, oil and gas, and also plantations. So these are some of the reasons and also some of the topics that investors can watch out for under the respective sectors. For the banking sector wise, we like the banking sector based on their robust loan growth projection. Favorable conditions are also may also result in more M&A activities. Renewed interest in the capital market financing will likely to boost the fee income outlook. So with the Bursa Malaysia having delivered a total of 55 IPOs, we expect the momentum likely to sustain. Bursa Malaysia is really projecting 50 IPOs in this year, so this will likely to be favorable for the M&A activities as well. For the construction wise, we expect construction sector to remain steadfast, riding onto the budget allocation, whereby the government expenditure hovers at the 80 billion. Although there's no upsize compared to budget 2024, we think that this will likely to sustain the construction sector as investors balance out between the public infrastructure works and also private works, mainly led by data center projects. For the industrial, specifically data center related companies like data center supply chain related companies like your Southern Cable, UE, and also Pekat, these companies will likely to grab a slice of pie under the DC related projects. For the logistics wise, we like Tasco and also Westport capitalizing on the potential improvement in trade activities. So earlier we did share the trade movements between US and also Malaysia. So despite Trump presidency back in 2017 and also 2018, we did see our trade flowing to US continues to flourish. So we expect higher trade activities whereby logistic players will likely to capitalize onto that. RE companies will likely to continue to benefit under the rollout of LSS 5, your CGPP, and also the adoption of RE or sustainable practices that's outlined under the NATR, as well as the higher allocation under budget 2025 as well. For the technology wise, we expect technology to be benefit from the improve in semiconductor sales, which is projected to grow by about 11% based on the world semiconductor trade sales performance. The telco sector will likely to ride onto the deployment of the dual 5G network rollout, and also valuations appears to be undemanding at this point of time. The utility sector is primed to ride onto the surging electricity demand, particularly from data centers, increasing adoption of electric vehicles, and also the energy transition. So under our specific topics wise, we like Hong Leong Bank for its solid progress in its rising regional contributions, most notably from the Singapore segment. The group is also backed by high asset quality and also dissipating concerns on its China associate, whose operations has been solid thus far. On to Southern Cable wise, we like the company for its strong order book replenishment, whereby the group holds approximately close to 900 million worth of order book, breakdown by about close to half comes comes in from the long-term contracts, and also about half from the purchase orders. So this close to 800 million represents about 0.8 times of the FY23 revenue. So we expect this figure to likely to ramp up, particularly in this year, following the Tenaga's new 1+1 contract cycle. Considering that the existing contracts are already near their tail end. So we gather that Southern Cable has also secured approximately 20% of the market share of Tenaga's past tenders. Southern Cable has also reported improved in margin expansion. This is driven by the higher orders from the medium voltage and also high voltage cables, which potentially use better margins following the increasing in power demand. Expansions remains largely on the cards as well. To meet the growing demand, the group is expanding the production of 500 km per year in this calendar year. The group is also investing about 30 million in new facilities on the 13 acres to increase the capacity by about 20 to 30%. This is mainly to cater for the US market. As of the 9 months, the group operates at about 84% production utilization, which is already close to its max capacity. On the next company, UE Holdings wise, we like the company for its sustainable order book replenishment. The group is specialized in the HDD solutions, critical components for modern grid connectivity, and holds exclusive subcontractor status with his top two customers, who has been serving Tenaga over the past several years. Onto this order book wise, as of the 31st of August, UE unbilled order book stood at about slightly more than 200 million, which will likely to provide earnings visibility over the next 2 to 3 financial years. With the recent developments, the group has also secured the order book replenishment of about approximately 30 million. This has bumped up their order book to roughly around 250 million as of the latest numbers. So we expect a total of 100 million of order book replenishment for this financial year. So the expected order book replenishment will also be driven by the UE's position, which holds an exclusive HDD status, horizontal drilling, rising demand for data center connectivity, and also stronger margins from the Singapore operations. The expansions are largely on the cards for the UE right now. As of the 6 months, UE manufacturing capacity has reached at close to about 75%, which is nearing close to 80% of the optimal level. To meet the improving demand, UE plans to install at least 3 new lines production facility in FY27, expand our capacity by 73%, which is fairly sizable, which is targeted to be completed in this calendar year. On the next company wise, we also like Pekat Group Berhad. I think share price has run up quite a bit since our report on 2nd of January. The group, we like the company for its emphasis on the rooftop installations over ground mounted projects. For commercial and industrial project alone, Pekat commands approximately 10 to 15% of the market share in terms of the installations. The group also has a synergistic business model with the ERP and also trading segment consistently contributing approximately 30% to their top line. 30 million to their top line. The group also commands a fairly decent margin from its newly acquired EPE segment, which is a well-established manufacturer of medium voltage switchgear. So this company, EPE Switchgear, commands approximately 30% of the market share, which likely to benefit from the long-term grid upgrades and growing data center market. The group also consistently maintains an order book of approximately 200 million, driven by its focus on fast-track projects. As of 30th of September, Pekat's outstanding order book stands at about 360 million. Half of it comes from solar and also half of it comes from ELP. For the property sector wise, we like Legenda Properties Berhad. The group is well positioned to leverage onto Malaysia's government initiatives to boost the home ownership. The group commands a sizable land bank of slightly more than 5,000 acres across Malaysia, mainly in Perak, Kedah, and also in Johor, so that carries a potential GDP of 14.5 billion to be spread across 8 to 10 years. So another thing to note on the agenda is that they also of these 5,200 acres, roughly around 1,000 acres situated in Kulai. So that is part of the Johor Singapore Special Economic Zone development. So the group may also likely to be potentially benefit from the potential improvement in demand of housing in the Johor region. With the property price at approximately 250,000 per unit for single story terrace house for Legenda, we think that the recent salary hike of civil servants are expected to boost demand, will likely to be benefit on Legenda as well. We think that future growth will likely to be supported by unbilled sales amounting to slightly more than 800 million as of September last year. This came in slightly higher from approximately 750 million as of June last year, as well as the sizable land bank. For the next company-wise, we like Solar West Holdings Berhad. The group is one of the leading clean energy provider in Malaysia, having completed 1.2 gigawatt of projects, which is highest amongst its peers compared to companies like Pekat, Semaiden, Sunview. The group also consistently captured average of 20% market share in the EPCC jobs in the previous LSS cycles, LSS 1, 2, and 4. The group also has a strategic efforts to build their diversified solar empire. As of the 6 months in the FY25, the RE portfolio contribute approximately 16% of their profit before tax. Year to date, the RE portfolio stood at approximately 250 megawatt peak, coming from 35% from CGPP, 26% from LSS4, and the remainder from solar rooftop. The group also has a robust tender book of 7.2 gigawatt, comprising of Malaysia about 5.7, overseas mainly in the Asia Pacific region at 1.5. Based on the latest data that we have, Solar West unbilled order book stands at close to 1 billion, which is equivalent to about 1.9 times of its FY24 revenue of about 500 million. So this will likely to sustain earnings growth or earnings sustainability over the next 2 to 3 years. We also like Inari, that is well positioned as a beta play, being the largest market cap and also the highest liquidity tech stock being traded on the Bursa Malaysia. The group is also likely to benefit from this sector recovery, whereby earlier we did mention that the world semiconductor trade sales is expected to improve by about 11% in 2025. The group also stands out for its exposure of the AI market and rising investment in data centers for its value chain initiatives, onboarding of new customers, and also rollout of new products. So the legacy of 5G filter products is expected to remain to attribute towards the potentially stronger demand from the new AI capable smartphone replacement cycle. So for Franken wise, we like the company for its strategic relationship with Global Foundry TSMC amid the strong AI chip demand. Already most of the technology players, not just in Malaysia but across the globe, has also expressed greater confidence in the capex rollout, which is likely to prompt greater demand within the sector, particularly for the cleaning services. So the expected ramp up is in TSMC's latest advanced nodes will likely to increase the cleaning activities. So this will likely to benefit or indirectly benefit Franken as well. So the last company that we like for the first half will be Malakoff. I think Malakoff share price has also run up in recent days. The company is the largest independent power producer in Malaysia, making it the front runner to secure new gas fire plants in Malaysia. Potential growth will be in the waste management business, expected tariff adjustment in its concession business in FY26, and also in organic growth via the acquisition of E. Adaman. So we think that growth opportunities are largely on the cards with the finalization of its waste to energy plant. So we have a buy recommendation with a target price of 96 cents. So with I think once the waste to energy plant finally takes comments, we expect a potential re-rating in terms of the share price as well. So in terms of the in short, in the first half wise, these are the companies that we like, which also could promise a potential capital gain of more than double digit.
So, if you're interested with our reports, you can always web through our Apex Academy to view through all of our reports. So, before we move on to our next session today, we will proceed to the Q&A session from the live chat box. So, we will gather the question for a minute, yeah? Okay, we have one question from the live chat box. So regarding SolarWest, right? Understood it has been included into the topic. What is the view from Apex on the potential impact on net profit margin in SolarWest? Will it be driven adversely by LSS 5 in view that profit margin in LSS project is that it may be in a downtrend wise?
We think that we are projecting profit margin to see mild deterioration, maybe just in terms of net numbers we may be, or EBIT numbers we may see like a mild decline, but yes, we may see, maybe we will see like a slight decline, but this will likely to be cushioned by the lower solar module prices. So I think the tariff set by the government for LSS5 will likely to see sequential weaker compared to like LSS4. Recall that the previous LSS5 we did see that the tariffs continues to see sequential downtrend. So in terms of LSS5 wise, we expect some margins compression, but this will likely to be cushioned by the lower solar module prices and also improve in efficiency. But we also do note that the total absolute value of LSS 5 at 2 gigawatt is also very much higher compared to the previous LSS cycles. So we expect numbers to remain fairly stable, but margins were likely to see just a mild compression.
Okay. So we'll proceed to the next question. So, I read about your report yesterday targeting Oriental Copy as 81 cents. Meanwhile, other brokers is around 60 cents. What makes you setting target to this high, and how confident are you for achieving this? And what will be the target price by end of the year? I think I will take on to the question.
Chelsea is the consumer analyst in the Apex, and she's the one that wrote onto this piece of article. So maybe Chelsea will take on this question.
Okay, so about the setting target to this high target price, we expect that 2026 the revenue from the additional 10 expansion stores will kick into the revenue. So this drove our 2026 earnings. Therefore, we set this high target price, and also the central kitchen of the new central kitchen of Oriental Copy will be setting up in Q3 to Q4 2026. So it may have some cost savings on this financial year. So therefore we took this assumption with I think the earnings per share of 4 cents, that with a 30 times multiples. Therefore it achieved our 81 cents target price. And also another factor that we are confident with this target price is sorry, give me a minute. I lost track a bit. Oh yeah. Another confident on this stock is the franchise. They won't be conducting any franchise on their moving forward plan domestically. So it won't be another. It won't replicate the peers like Old Town. Therefore, we are confident with the management. So I think this answer your question, and we'll now proceed to another one. So Kenneth, you mentioned that the solar module price is expected to be lower and expect to offset the negative impact from LSS5 margin. Can you share 2 cents on the logic of lower solar module costs and how confident is Apex on this projection of lower solar module costs?
It's not the projection. It's already on the lower trend in recent years. If you compare in the past years, solar module prices, particularly in LSS4, we did see solar module prices or solar panel prices was relatively high, driven by the inflationary pressure or the shipping constraints. We did see not just solar module or solar panel prices, raw material prices has spiked up sharply back in the LSS4 cycle, and subsequently there was a delay in the LSS4 rollout plans. So with I think based on the historical number, I don't have the exact number right now, but based on the current solar module price at about close to about 10 cents per watt, we expect the margins will likely to be well cushioned.
Okay, I hope this answer your question, Justin. Do we have more question from the equity side? If not, I think I can I have also some of the question for you, Kenneth.
Okay.
So, with the current Johor Singapore Special Economic Zone agreement signed, could you share some of the beneficial counter on this?
I think previously I've shared that the agenda could be one of the beneficiaries that we have covered under Apex coverage, whereby they have land exposure of about slightly more than 1,000 acres in Kulai. Some other companies that we like will be Sunway Berhad and also Sunrise Berhad, which has sizable land bank in Johor, including Masing and also Sam Tabi Property. For the construction sector wise, we like companies that has exposure in the development of construction activities in Johor, like IJM and also Sunway Construction. We also like utilities players riding onto the improved economic activities or infrastructure developments such as your Tenaga and also Malakoff. So I think these are some of the major beneficiaries under the Johor Singapore Special Economic Zone development.
Okay. Do you think that upcoming 50 companies IPO will repeat the success in 2024?
Yes, I think that Malaysia still has ample of liquidity. If you recall earlier, we did highlight that trading activities on Bursa Malaysia has flourished. Average daily trading value has improved by 50% in 2024. So we think that the momentum will likely to remain in place right now. If you dive down into SC's website, there's a section on the draft prospectus. You can see that there's still a lot of or ample of draft prospectus listing over there waiting for authorities for approval. So we expect the momentum of the IPOs to continue moving into 2025.
Okay. As you have mentioned, the impending removal of round 95 blanket subsidies, could you share the potential economic impacts or perhaps some of the counters may be affected?
This is the first time the government will uplift the blanket subsidy from 195, so we do not have like a specific implication on that, but what we can expect is that inflation will likely to tick up. The, while this measure may only impact the top 15 income earners in Malaysia, we think that the implication will likely to be felt across the board as well. Goods and prices of goods and services may likely to tick up post the implementation, whereby we have already shared that inflation is expected to hover above the 2% mark in 2025. In terms of the companies wise, we expect Petronas Dagangan will likely to see some implication as in anticipation of the potentially weaker demand in the fuel price in terms of the fuel prices adjustment.
Okay. So, is there any question from the floor? Okay. What's the view from Apex due to the recent policy issue to restrict sales of AI chips to other countries, including Malaysia, which flagged as Tier 2 country? What are the potential impact on DC teams in Malaysia? And if there's any specific counters in Bursa which will be impacted adversely?
In terms of this question wise, okay, maybe I just talk about the broader market first. Over the years, our trade activities with US accounts to only less than 7% of the push on the Malaysia's total trade. So we think that despite this implementation, it's not just only Malaysia, but other countries may also felt that impact. So we think that impact to Malaysia directly will be fairly minimal at this point of time. So in terms of data center wise, we think that Malaysia will continue to stand as one of the primary beneficiaries under the data center relocation or the setup of a data center in Malaysia, given that Malaysia continues to have continues to own a relatively cheap land bank, and our ready infrastructure also provides a good destination or favorable destination for foreign direct investment to invest into Malaysia. For companies that may likely to be impacted by this sector wise, I think our semiconductor value chain is still relatively at the lower end. So I think that in terms of impact on specific companies, we do not have any specific companies that we can dive down, but maybe companies like NationGate or Frontcan may likely to see some more implication to this. But still, we think that we have already shared that we will continue to benefit from these trade diversion measures. Trade activities to US continue to flourish despite the tariff implications. So overall, we expect implications to be fairly mild. But in terms of Malaysia stock market performance wise, we expect some weakness to come by across the technology related companies. But then again, over the long term, focus will eventually shift back towards the corporate fundamentals. If fundamentals remains fairly strong on a growth trajectory, I think investors will likely to pour back into the investment in the technology sector.
Okay, thanks for sharing, Kenneth. So perhaps we take one last question from the floor, then we will get into another water break session, then we will continue our Q&A session at the end. Is there any more question? If there's no question, then we will take a short summary before our break. So allow me to give a brief summary of Kenneth's presentation. In the global market view, we saw the KLCI rose by 13% year-on-year, ranking among the top 3 among the selected global indices. For the global market outlook, we expect another 2 rate cut this year, right? And Kenneth share some trends in the Dow Jones and KLCI market during the Trump 1.0 administration. On the domestic front, Kenneth discussed the performance of Bursa Malaysia sector in 2024. As for the outlook, we remain positive about the overall Malaysia market in first half 2025. Lastly, Kenneth highlighted the top picks we favor during this period. So I hope all of you that tune in have grabbed some of the idea what happened in the market in 2024 and what to watch out for in this first half 2025. I think it's time for me to call off a break. So let's take a 5 minutes break before we resume our derivative section. Thank you.
Okay, thank you.
Hi, welcome back. So I will now hand the stage over to Megan Wong. I believe she's excited and eager to share insights on the derivative markets. So Megan, the floor is yours.
Hi everyone. Today I'm gonna present on this. Purely my presentation will be on charting, technical analysis, fundamental. I'm more to intraday trader or swing trader, so therefore my analysis will be more on trading. So for KLCI, I'll be talking about local product and foreign product. So for KLCI, at the moment, market is consolidated within 1360 to 1697. This has been happening since 2021. So you see, if it's market is in the box, so market has been consolidated since 2021. So at the moment, market is still within this range. This is the range that market is moving right now. So in 2024, market actually advanced. This is where it started to advance. So market actually advanced from 250 points from 1445 to 1691 since early of January. So KLCI is actually lying at the border of 1006 level, ranging within the consolidation. So at the moment is actually in the middle of the consolidation. So trading might be a bit hard at the moment, so we will recommend more on intraday playing. So short-term trading is more feasible at the moment. Support is 1598 and 1509, which is this line. So because this market outlook, the next round I'm gonna see will be in July. So therefore the range is a bit further. But however, if let's say you want to have a daily trading recommendation, you can actually join our Apex Academy, or we actually make it into a video. You can look at our YouTube channel. We will have trade recommendation in that channel. So FKLI futures, basically, if let's say you're not exposed to futures before, FKLI is actually used as a hedging tool for your stock portfolio. Let's say you are holding some stock where at the moment it's not moving anywhere, or eventually a bear market came. So what you can do, you can actually hedge by short selling in KLCI market. So that is one of the tools that you can use while while protecting or hedging on your portfolio. Second one that we're going to go for is the second star product in derivative Malaysia. So crude palm oil. Crude palm oil is actually a star product of Bursa derivative. This is an international market, and the volatility is very good and is very suitable for intraday trader. So market is actually running on an upward channel. As you can see on the chart, it is on an upward channel. This price is now at the midpoint of the pattern, so which is now here. So the possibility of this market is that the market price is at a crucial level. Why do I say it's at a crucial level? It's because if you look at the chart, the upward channel is actually running in the midline. So at this point, there's a support too. If let's say market has a chance of coming down and supporting eventually, this could trigger for an upside later on. Of course, here, this will trigger for an upside later on. But if let's say market try to put it in a green, since the upside I change it to the green. If let's say market trying to go for a downside, yes, I think it is more according to what the chart is saying, because upward channel is going for a bottom back to here, is more trending to the theory. If let's say they want to come down, is very possible as well. So if let's say they want to come, how they got to come down? They will come down here, supported, which is what happened this week. Then market will resilient to this price, which is 4425 to 4431, and it is now the price at Friday closing. So if let's say this area could not be supported firm, there's a possibility of market coming back down here, which is 38 level, 3871 or 37 level. These are the support that we are looking at if let's say market were to come down. I can't be telling you that all these price will happen forever, because I'm gonna see the next round in July. So like I say, if you would like to know about intraday trading on crude palm oil, you can actually join our Apex Academy and our YouTube channel. We actually prepare our AM PM trade recommendation in YouTube, so you can watch our recommendation from there. So if let's say you are interested of opening an account, and so you can actually contact us, call our company, contact us to our CSR or our dealing team. We can actually help you in opening an account, and we can assist you on trading from there.
Can I interrupt for a bit? So this line will be in the first half happening trend. Am I right? Like
First
this
I
this
would
two
say
possibilities.
futures run very quickly. We couldn't, give a time frame that this will happen the first half or second half. No, this could happen in 2 days' time.
Oh, okay.
Yeah, so market could run, if within 1 month, CPO can actually run about 700 point, 1,000 point or so. So I would say, therefore, I would say that if let's say you want to have a more precise trading recommendation, I would say you join us, our YouTube and so, or to trade with us, then we can actually help you in trading recommendation. So that is what I suggest. At the moment, what we are showing right now will probably happen next week, and it probably happen, within
Yeah.
this month.
Future
So
market move
exactly,
very fast.
we move very fast.
Yeah,
So
sure.
therefore, I would say this one probably the validity will probably until month end.
Okay.
All right, first quarter, and so we don't say so far first. Unless market is supported above 4 level, we can see market continue to go up later on. But however, this also have to be, because it's a commodity product, it has to be supported. The price has to be supported by the demand as well. If let's say the demand is not there, the price, if any price increase, will not sustain. So lately, of course, Indonesia was talking about biodiesel launch. But however, if let's say the price is not competitive enough, it probably will stay in, this biodiesel recommendation will probably stay in Indonesia only, and it will not spread to other country. Because let's say petrol is lower, the price is lower than biodiesel, why should I use biodiesel?
True.
So therefore, I would say this thing probably, they say they don't want to launch on the 30th of this month. Well, probably it's feasible in Indonesia, but we see how later on. So at the moment, if let's say that eventually really widespread in the region, then probably we'll see a price increase, because no matter what, the demand has to come in order for the price to go up as well.
Okay.
But at this moment, I would say we leave it to trading at the moment, because fundamental only reflect in prices in months. It won't happen like the next minute. The fundamental, if let's say in March only it will be reflected, but your trading, you will be stuck around here. So you won't be want to take a lot of risk in trading. So therefore, I would suggest at the moment do intraday trading, or join us in YouTube, or join us as a client to trade on FCPO, so that we can help you to do the planning.
Okay.
Okay, besides that, there's another star product in, of course not local product, because local product futures we only have 2 star product. So the third product that we want to recommend would be a Hang Seng market. Well, Hang Seng market is a very interesting market. Hang Seng has been quite consolidated over times. Even US market is recording record high every day. But however, Hang Seng market has been quiet. So they might have some potential here. But however, I am actually looking at, Hang Seng market, it is suitable for intraday trading. The market range daily probably will be around 300 and 400 points. This is actually a norm for Hang Seng market, 300 to 400 points. The leverage is low for mini Hang Seng, Hong Kong dollar 10 per point. So if let's say 300 points per day, you got 300 points profit times with 10 Hong Kong dollar, this is your earning, 3,000. So how much is it convert back to Malaysia ringgit? It will be 1,007, because it's almost half. It's almost half. So let's say 50 cent in RN is they need about 1 Hong Kong dollar to exchange to our 50. 50 cents
Malaysian
ringgit.
ringgit.
So it's almost half. So market price now is actually at support, and support level is at 076 and 18945. Yesterday it closed at 18971, so it's actually lying at the support. So I think I won't do any selling at this moment. I would rather long if let's say this price could be supported. Definitely market can run up and down. I don't want to be very firm that this must be a up or this must be a down. Market can go up or down, so we must be flexible of whether to long or short. So but at this moment, because the support is here, we never short at support unless it stay long enough that it stay below the support and support turn resistant. Yes, we will try selling, but at this moment I will not try any selling at the moment. I'm more prone to doing a long instead of a short at the moment. So the support, as long as the price is supported, I will stay long. Okay, short, if let's say there's a short opportunity around here also, I will just wait. I'll wait for the rebound, and if there is a price that is worth for me going in, the risk and reward ratio is there, then only I'll try to long short later on.
Okay.
So same thing, if let's say you want more tips or more trade recommendation, you can call us, and our trader will be there to assist you. So the next product they were going for would be a US market. I would say US market will have a very big
Fluctuation?
yeah, probably yes. I think, well, of course, our star CEO, our star president coming back for his second administration.
Yes.
So therefore, I would see US market will have a very wild movement next year. This year, sorry.
This year.
Haven't realized that it has been 2025.
Yeah, time moves so fast.
Yeah, exactly. So if let's say US market, I would say some product, micro product would be the product that we go for because of our currency. Our currency is too slightly low. So therefore, if let's say we were to trade US product, we will choose some product that is having lower margin. So the product that I chose today would be all at low margin. So of course, if you talk about US stock index, we go for stock index first. The first stock index I would recommend would be Nasdaq. Why so? We go for micro Nasdaq. Micro Nasdaq is actually the most volatile micro products in US. So it's suitable for intraday trader and who love fast and furious market. So if let's say you like the heartbeat, go for Nasdaq. So in 2024 market at once, this is the area that it runs in 2024, the one in the oval. So market at once 6,000 point in 2024. So the potential earning, if let's say you hold a position from January to December, this will be your potential earning. And how much is your capital? Your capital is 2,300. By depositing 2,300 US dollar, you have a potential of earning 12,000 US dollar last year.
That's damn hot.
Yes, exactly. So it's like almost sixfold of your capital. So I'm only talking about one lot.
Yeah.
If let's say you are holding two lot, this will double, this will double too.
Yeah,
24,000.
Yeah,
so
24K
this,
USD.
of course, the capital will increase to
Yes.
4,500, 600 lah. So this is how. Why do I say Nasdaq? Is because actually last year market overview they actually record all-time high almost every other day.
Yeah, sure.
So in 2024, so prices finally retraced for correction over past few days. Of course, because of the data that comes out, employment, job data that all comes out. Of course, inflation kicks in, so all these.
Yeah.
So therefore,
economy data.
Exactly. All the economy data is not showing some good sign. So therefore, lately there are some corrections, some retrace in the upside. But however, there are some points that we need to look after. This is the point for 2024. Like I say, there are record high every day. But however, record high couldn't happen every day.
Always.
Almost,
Yeah.
if it run through for
Yeah.
until 2026,
There's
I'm
something very
speechless.
sus. Yeah, sus.
Yes, I'm speechless. But however, even if they want to go up, right, a healthy correction, and then if let's say market continue to go up, then I would say it's feasible. If let's say you want a long, if let's say after the healthy correction, yes, you might want to try that. But at this moment, I would not recommend for a long position overnight.
Yeah.
So long position, cautious buy. So do some intraday trading on a long position. So at the moment, market is actually going for a consolidation during what month? In July month to September month is actually going for until November month is actually going for a consolidation. Only lately that there's another record high. So because of the data, it came back down. So now the crucial point is here. 20980 is the crucial point. This is a near future. I'm not talking about a few months later, near future. So price is actually closing around 21,000 on Friday. So it's quite close to this price. So if let's say, what you want to do, if let's say market could support above this line, do for a long position intraday, okay, or short term. But I will put it in green since it's up. But if let's say market could not support and penetrate 2090, wait for a rebound to 2090 and short sell. This will be the potential for near future. Since Trump is actually his administration is on the 20th. It's on the 20th, right?
20th this month.
Yeah, 20th of this month. So it will be next week.
Yeah. Yeah.
It will be
It's
next
11 now, right?
in
Yeah.
11. So
No,
about
it's 11.
two weeks
Yeah, 2
time.
weeks.
It's about 2 weeks time. So during his administration, probably there will be some upside in the market
Yeah.
to celebrate his administration.
Yeah.
But well, we won't know. So if let's say before that, what happened is, if let's say 2980 it doesn't support and trigger down, you may want to look for a rebound before a sell down. I wouldn't say it's an immediate bear run, but I would say more of a correction, because bear run couldn't happen like overnight. It has to happen with a
At least
few long
yeah.
bars.
Yeah.
Then only we can say that. Well, of
We will
course,
confirm that's a bearish
exactly.
trend.
You have to go for a 200 simple moving average
Yeah.
and so on, weekly or daily chart to confirm that.
Yeah.
So I would say any pullback now, we'll consider that as a correction. So this will be for Nasdaq, a market to watch, especially at the moment it's at the support line. So of course, target wise, if you want more target, because we actually write blogs as well. So if let's say you join us as our client, we will actually provide you with some recommendation,
Short
for
notes of-
short notes
yeah.
and so to
watch
help
out
you
for,
on
yeah.
daily trading. So I don't want to put too many support resistance around here, because it probably will only be liable until 2 days later or until next week. So I wouldn't want to put too much point here. But if you are interested of trading in Nasdaq, do contact us.
Yeah, because future market can happen any
Exactly.
second. Like suddenly next second is a upward trend. Suddenly next second is a
Exactly.
downward trend.
So if let's say you want to trade, come to us, because we don't want to be liable to any price support resistance at the moment, because today it may work, tomorrow it may not apply anymore because market move too fast.
Yeah.
So I would say, to protect you as well, your interest, do call us and become our client, and we will assist you from there.
Yeah, we'll share more information about that.
Exactly. So besides that, the second market that the stock index will be S&P. S&P would be the market that we will recommend because it's more stable. It is more stable stock index relative to Nasdaq and Dow Jones, and then it is suitable for a swing trader who love low capital. The capital is only USD 1,005, and this leverage is quite high with higher leverage. So if let's say you want a low capital and a high leverage, S&P 500 is something that you want to go for. And same thing, micro product. Because for US product, there are 3 stock index. These 3 stock index, they actually break down to smaller product, which is one is a regular, which is what we call a regular product, S&P 500. Second, because they want to reduce the margin, so a reduced margin product, S&P 500 product as well, is called E-mini. So because they found that this margin is also quite high, so therefore they further reduce to a smaller product, fractional product, which is micro E-mini product. So all these prices actually run, I would say, concurrently, even though they are different regular E-mini and micro E-mini, but however the price is the same, the fluctuation is the same as well. You won't see any price where, you know, this price is discount of 20 points compared to micro. No, you won't see that. They run concurrent. So therefore is you can if you want to opt for S&P, micro S&P with lower capital, higher leverage. So in 2024, S&P 500 advanced 1,450 points, which is the one in oval. So market moved 1,450 points. Approximate earning, if let's say you hold the position along the year, you will probably make 7,250 US dollar. Capital that you put in is 1,005. So your potential earning is almost fivefold. So this is actually feasible in derivative, because what you can do in derivative, not to say that you have to do intraday trading every day. I have some client, what they do is they probably hold a position early of the month, and then probably they close the position end of the month, so until the contract ends.
Okay.
Then they roll over to the next active month to trade.
Okay.
So that is how you can actually turn into this kind of profit. So of course, in order to hold on the position, you need more capital to put in, if let's say you want to play that way, okay? Because market fluctuate, you see, market actually fluctuate. You need more capital in there in order for you to earn this money. Exactly. You need some buffer in trading. So this is more for intraday. If let's say you want intraday trading, this is something that you need to deposit. Okay. So market overview. Market record high is like a norm in 2024, same as Nasdaq and Dow Jones. It happens mostly every week. Lately, there is some selling pressure, just like Nasdaq, in a market where you could tag along for correction. Same goes like this is also happening because of the data that is distributed in the market. So therefore, you can actually tag along for correction as well. Point to watch, 5980, 5865. So market close yesterday was 5866. So it's actually at the support. So this price also at the support, where is here. Looking at this box here, is actually at the bottom of the box. Of course, you have to go for a smaller view. You have to go for a smaller view. Let's say, okay, market is actually support. So it is trying to break through, but whether it could support or not, I don't know. So we see what happened next week. At the moment, support, like I say, support we don't short sell. We continue, we'll only see one thing, support we only long. We long only when there are some buyer that comes into long. So at this moment, probably we don't do anything until we see some buyer that coming in to support the market. Then only we will go in. So in order to trade this market, then probably you want to go for a smaller time frame. Intraday, go for 1 minute, 3 minutes, 5 minutes, or 15 minutes. If let's say you want to hold on longer term period, then probably you go for 30 minutes, 1 hour, or 4 hours. So this is how. So therefore, watch out on markets. The other next would be a Dow Jones market. Dow Jones market, we go for micro Dow Jones as well. So it is suitable for trader who love low margin. It's 1,000 only with lower risk appetite. Why do I say lower risk appetite? Because their 1 point is only 50 USD. So it's like 10 times lower compared to S&P 500. S&P 500 1 point is 5 USD, and this is only 50 cent. And the deposit that you put in is 1,000 USD. So market could move fast at times. Leverage is low. So in 2024, the one in oval is how they move in 2024. Same as S&P and Nasdaq. Market actually move upwards. They at once about 7,672 points. So approximate earning is 3,800. Capital they put in is 1,000. So it almost fourfold. So market overview. Market is actually showing some selling pressure as well lately. Same goes to S&P and Nasdaq. So important point to watch. Market closing yesterday 42160. So this is the point, the one in the box that we are looking at. So we look at 4 hour. Market is actually within the box. They are trying to penetrate. So now we want to see whether this is a fake breakout or whether this could be supported later on. At this moment, I won't sell here. Although it's breakout from the box, I want to judge whether this is a fake breakout or this could be supported later on. So at the moment, I won't be selling until there is a rebound and we will see whether they resisted to the resistance. So the point to watch, 42485. Second point to watch, 41791. So now the market is doing 42212. So at the moment, don't do anything first until a rebound for Dow Jones. So another market, what if let's say Trump being administrated and Dow Jones is actually uncertain.
Oh, uncertain.
We don't know what to do, market is zigzag, seesaw. I don't know what market wants, uncertain.
The pattern
So
is not
exactly
screenable.
Exactly. So what you're gonna do? So of course another place is a safe haven. It's always silver and gold is a safe haven at the moment.
Yeah, sure.
Of course, during his administration, crypto actually went up a lot.
Yeah.
But of course, crypto is not allowed in Malaysia.
Yeah.
So at the moment, what we can go for is gold market. Micro gold is another one that you can go for. Of course, Malaysia, we have F gold as well. If let's say you are interested of trading gold in Malaysia, you can as well. In Malaysia, our gold is actually benchmarked to London gold instead of US. Bid ask is there. Volume can be improved, but however, if let's say you're not trading big, you may go for F gold. But if let's say you are having big volume in trading, I would recommend for micro gold. It would be more volatile. So why do you go for micro gold? Whoever that go for micro gold would be suitable for trader with lower risk appetite, because per day the movement is normal day. I'm talking about normal days, not a big fluctuation day with news and all. So but normal days it move around 15 points to 20 points a day. So the capital is as low as 1,200 USD. Best timing for gold trading during economy uncertainty, which is now. So you see gold has been moving outside. This is how they move in 2024. They move from 1,996 to 2,800. Actually, gold has never been so volatile and active. Last year, it actually go along with the stock indexes in US as well. So, it's like I buy indexes, I'm afraid every day record high, but I also want to hedge in gold. So you see it moved along with the stock index as well.
Yeah.
So it went up to 2,800 and now it's actually near record high as well. So for in 2024, they surged about 800 points from 1,600 to 2,800. So approximate earning is about 8,000, while your capital is 1,002. So this also almost sixfold in a year.
It's another hot
Exactly.
index.
Exactly, it's another hot index that you can do. So this one only happens during uncertainty.
Yeah.
If let's say market go back to, if it's a
Stable.
confirm bear run or a confirm bull run, this one will
Weaker.
will be weaker, and the volatility, you won't see that anymore lah. You won't see this kind of movement anymore.
It will be a stable run, can I
Yeah,
say
it
that?
will be more still during that time. So market overview, market is trading near record high. Yesterday closing 2718. So this is the price that market is moving right now. Yesterday was a big surge. It came from 2000. The hype is almost about 70 points to 80 points yesterday alone. So that is a very big movement in gold market. So at the moment, like I say, uncertainty. So gold is the best time to trade right now. So you can actually go for that. Approximate earning last year was about 8,000. Investment is 2,002. Sixfold in a year. Market overview, near record high. Price remained resilient to 2735. Actually, market went up to this price yesterday. During the early morning in US, it actually went to this price. Later on, it fall back to a close 2717 around this price. So fall back. If let's say any fall back to below this price 2717, market can go back to consolidation again. You see at the moment, market is actually going for a contraction. Exactly. So a contraction, and there's a midline here at 2681. So it could be a seesaw later on. So what will happen? Market might be like that. Upside will be like that. If it's a downside, it could be like that. So we don't know where they want to go, but at least we know that if let's say here is not supported, at least they may try to come down first to support. So you may try to short some intraday around here. If let's say this couldn't penetrate, but if penetrated, don't do that, please. If it's penetrated, just let it be, because you also don't want to buy too high.
Yeah.
Wait for a correction, then only you long again. So if let's say it penetrated with a strong bar, what is a strong bar? Strong bar is something like this. Strong bar is something like this. The one in green, this one, the one in green. This consider a strong bar. If let's say this bar happen here, then likely you will be going up already. So probably this will turn to support. So probably later on you will see for retrace, if let's say supported, you can long again. So this is how you see market. So the support 2682, 2635, which is here. If let's say it came down, but resistance 2735, 2763, 28201 here and here. Of course it can go up further. If let's say it really comes 3200 is somewhere that I'm looking for, if it really can support. So well, go for gold if let's say you are someone with a lower risk appetite and low capital.
And this market uncertainty right now.
Exactly, this is a market uncertainty period where you can go for. And you know, Trump is a tariff man. They will he'll I think the first thing he administrated, he will say that tariff here and there. He already told everybody that I will increase tariff here and there at least 10 to 20%. And
which Chinese already got affected this year.
Exactly. So he said that I'm gonna increase another 60% on top of whatever you have now. And for normally when tariff they increase the tariff, right? Normally it's pretty hard for them to bring it down later on. So we see what will happen at later on. But however, during his administration, what we can see is that stock indexes continue to go up
Yeah,
to
definitely.
his previous
Yeah.
administration.
Because he's a businessman.
Exactly. But however, commodity was quite bad during that time.
True.
So yeah, so that would be somewhere that you want to go for. So I would say if your first bet probably is stock index first in US. Second, of course, gold, safe haven in case there's a bear run. Gold as safe haven. But of course, in derivative, we don't care whether the market is going up or down. If let's say the market will come down, in derivative, please, please come down, because bear run is pretty fast. Especially bear run, you can happen 4 days straight in a row. These are the bars that could happen.
Yeah.
If let's say you see this kind of red bar that happens 4 days in a row, that
It's
could
a strong bear.
exactly that could
Yeah,
signify
bear
some big seller is coming in.
Yeah.
You can actually prepare to sell
Sell.
at your rebound already.
Yep.
So in derivative, you can't do anything in your stock portfolio, but you can hedge against your portfolio in futures. You can, let's say, do in FKLI stock index, or you can actually do in US market. So it depends how, and of course you see how much of your portfolio. Let's say your portfolio is $1 million or so, then you probably have to do some calculation and how you probably need to hedge in stock indexes. So we can assist you in that if once you become a client.
Yeah. Megan will give you more precise
Yeah.
details, what to trade, what to watch out if you join us with the account.
Yeah, our dealer will assist
Yeah.
you during that time. So besides that, another star product in US is crude oil, micro crude oil. So micro crude oil has been volatile over the past few days. As you can see, it actually went up from past few day was 9 of, I would say this day, the 23rd of December. It started to surge. I will take this price. This price was, the lowest price was 68 USD. It surged from 68 USD to yesterday. The highest was 77. So this kind of surge, right, you couldn't see last time. Last time in crude oil normally they only move about 20 cents, 50 cents, most 80 cents. But now their surge is
$1.
in dollars,
Wow.
in $5, in $2, or $10 even. So I do remember back in many years, there's this one day that crude oil went to negative 32 on the spot month, and I saw that the market coming down. But however, I was thinking that there is cost to do the business, so it won't turn zero. Prove me wrong. Market can go negative 32. Caught me in surprise. But however, because that was the last day of trading of the month, so I think most people would not be affected because they already rolled their position to the new month. But however, anyone that forced to close their position, I think that will be a forced close during that time. So it triggered to negative 32. So, but however, after that day, market rebounded, and since then, especially during the time that the war came in, when the war came in, the market start to move in dollars every day. $2, $5, $10 is a norm. So at this moment, market, after that, market come back to a contraction. This contraction was happening during our July market outlook. So what happened after that? Market went down, stabilized, do some consolidation during that time, and now coming back to 76. Last round we were talking about 76, 77 as the support or resistance, and it came back to this price again. So this range is where they move during 2024. So the low was if let's say crude oil has been volatile over the past few days, suitable for trader who look for low capital. Capital is only 600 per lot, and it is a high leverage. Why do I say that? $1 movement equals to 100 USD. I'm talking about per lot. So this is actually quite high already. So in 2024, market prices consolidated within 66 to 87. So I'm talking about 1 year. So it's
the full year.
2004. So 2024 happens here. 2024
Yeah.
happened here. Yeah, correct. This month. So it went here, which is 88, and the low is here. So that is here to here is 2024 movement. So market actually moved that much. So therefore market stay consolidated until 277 and is firmly supported. Then
Sorry, yeah.
sorry, there
Yeah,
is
sorry
some
for-
interaction.
Okay.
Okay. So market stay consolidated within this box. So there is a resistance here, which is yesterday movement. So 77 is the resistance. If let's say market could not support it above 77, it has a chance to go back down, back to the box, and it will zigzag again. So what will happen if let's say this could not penetrate? It could run back down again, and then they will do the zigzag, up down again. But if let's say market could penetrate the 66, right, it could go further. But however, this one is more war driven or news driven kind of product. So this one really have to look closely to administration of Trump, whether he will stop the war around especially in Russia.
Yeah, across the
It has exactly.
world.
It has last for quite some time.
Yeah.
Whether he can stop that or not, I don't know. I hope so.
Yeah.
So if let's say they really do that, I think the first thing that they can do is to lower the price of crude oil to stop Russia, because Russia, the main income is actually from crude oil. So if let's say they can reduce the price of crude oil, if they have not enough capital to sustain the war, then probably this will continue to go down. But you can mark me wrong, anything could happen.
Yes.
So
there's no right or wrong.
there's no right or wrong in trading.
Yeah.
So like I say, if let's say this keep on resisted, I would try selling around 70 plus here. But if let's say this is supported instead, 77 is supported, then this could go up. This could go up. Put it in green. So where first level is here, 84, second level is 88. So we shall see what happened after that. We want to be flexible in trading, because we are not any policy maker and such that we need to tell you or in the future how much it's gonna be, and so because future is trade by contract. Some contract will expire in certain months. So therefore we are more looking at swing trading or intraday trading. So our dealer can
Always
assist
support
you
yeah.
on this trading. So do contact us if you have interest
any queries, yeah.
in US. Especially I will see that next year will be a best year for US.
Next year?
This year will be a good
Very
year
nice
for
one.
US trading, since we have some legendary president coming up
Yeah.
to become a
It's
US
another
president.
star back to the office.
Exactly. So I would say US market will be in the highlight lah.
Yeah. So
Okay. So
Thank-
I think that's all that I want to present for the day.
okay. So thank you for your informative sharing, Megan. So let me invite Kenneth back to the stage to conduct the last round of the Q&A session. So if you have any question, please feel free to type in the chat box. Okay, so before we after we end the equity slides, actually we have another question. Assuming the slide today was being prepared upfront, is there any changes or impact on topics today due to non-farm payroll released by US last night? Kenneth?
Slides are always prepared ahead of the presentation. In terms of the US non-farm payroll that was released on yesterday night, the numbers came in above the expectations. So as a result, US stock markets has turned slightly volatile on last night. Given that the numbers came in above expectations, there's the prospects of interest rate cut for twice in 2025 has diminished. So with the prospects of interest rate cut lowered, we expect some volatility to kick in, but there's no change to our top stock picks for the moment.
Okay. Okay, so can I ask you some question, Megan?
Oh, sure.
So, could you provide an analysis of the recent trend in gold price and Dow Jones index, knowing that Dow Jones, you are sharing mini Dow Jones just now and mini gold trend. So, could you share the overall of these two indexes? Specifically, what factors may influence their movement?
Okay, I would put these two products into two different categories. Stock indexes would be something for, if let's say Trump administrator, I would say stock indexes, looking at his past record, stock indexes, he will try to push it up.
Yeah, sure.
Okay, but however, because of last year record highs, I am reserved on the speed of how market gonna go up. So I would still do for cautious buy for intraday trading for these stock indexes, while for gold is more to a safe haven. It's more to a safe haven to let's say anything that's uncertain in stock indexes, the fund will actually flow into gold market. So I would say another alternative would be gold market for an upside if let's say there's uncertainty in the market. But of course, I have to emphasize, if let's say market there is a confirmed bull run, gold will also come down as well, because people will start to cash out
to buy.
Yeah,
the
since they
equity
already
index.
since they already have you already know it's a bear run. Whatever I bought since long time ago, my physical gold, and so I gonna sell that because I don't want to sell at low prices.
Yeah.
So a lot of people will try to sell their gold during that time. So therefore, during bear run, gold can continue to come down as well. Will come down with the stock market.
Will it be tank like significantly, or it's just a gradually movement?
It could tank as well.
Oh, okay.
Yeah, because short selling is like that. If let's say one person trying to sell and a bunch of people trying to sell, right? Everybody will have a fear of loss, you know. Everybody will be will have fear that market will flush down, that everything I have will disappear. So people will just sell any price they have. Especially the fund manager,
Yeah.
they don't care. I want to protect my fund
Yeah.
first. I need
Yeah.
to sell everything that I have in hand.
Yes.
Yeah, not like us retailer, probably we have not substantial amount to lose. Probably it's just like a very small amount of my investment. Then probably I could afford to wait.
Okay. So with just now you shared that the economy statistic actually dragged down some of the indexes like in US. So can I know how confident are you into this US economy Trump leadership?
Oh well, I would say Trump leadership. Well, of course you got to know that he is already telling you that tariff is coming along, and if tariff is coming along, inflation will come along. And I would say that would change the lifestyle of the end user. Because if let's say last time I can go out to eat, right, this is the cost that I can afford. But now it's double of what I can afford. So maybe I still go out, but the frequency of going out is
Lesser,
lower
yeah.
and lesser. So that will change the lifestyle of the people, and people their liking will be different. They probably will opt for something that is cheaper already. So because the inflation, no one can actually cope. If let's say my salary is not increasing, but the inflation is eating me up. So therefore, lifestyle of the people will change. So to try to reduce the living cost. So that will actually lead to other new industry that is coming up. I would say more to a cost saving industry lah. FMCG, if let's say you can get something that's lower cost, or something that is entertainment at lower cost, all this will actually come up.
Okay.
I said entertainment. I don't know whether Netflix will actually continue to boom or not.
Okay.
It may, because you stay at home more already, because it's too expensive to go out.
Okay.
Maybe you want to stay at home, nothing to do, then probably you want to watch Netflix again.
Yeah.
The subscription increase again. It's just like during MCO time.
Yeah. Everyone travel at home.
Yeah.
There's nothing to do. The entertainment is only
Exactly.
Netflix.
Exactly. You are looking for a lower substitution of entertainment already.
Yeah.
So maybe that time there will be more industry that will come up, new in entertainment or new industry that comes up, which is more cost saving for the end user. Or even for the corporate side, then probably they want to look for somewhere that is a lower cost in supplying their products, their raw material. So that will take time because if you want to look for a supplier, also you take some time to look for a new supplier. So that also depends on what is the demand. Then that will change the ecosystem of the economy, I would say. So I wouldn't say everything will be bad, because every bad thing at the back will have some positivity. Probably it will be a revolution of businesses and industry, I would say. So that's my view of leadership of Trump.
administrative.
Exactly.
Okay. Can we have more questions from the floor? Question. Okay, so probably I will have one more question to Megan. So could you compare first Trump administration with potential future trend in the key market index? For example, do you think the investor will be more interested in the US market right now?
It depends on what kind of market. Like I say, everybody will opt for something that's at lower capital. So if let's say futures, I would say is one of them. Looking at his first administration, like I say, the key indexes normally will go up because he want to trigger the business. And of course, rate cut.
Yeah.
People are talking about rate cut,
Yeah.
but of course they want the government want to delay it. But looking at Trump, I don't know whether he will be able to reverse that and increase more rate cut. And of course, what he want to do, he want to reduce the currency. They don't want to be so expensive. They want to increase their GDP. So that probably QE will come back. So all this will come back to boost the economy. If let's say QE come back, I would say stock market will have a chance to go up again. But I don't know at how fast will be the rate. So that will be my view. My take is stock indexes probably will go back up again. Then maybe US stock market could probably come back, and CFD product probably will be a better bet for US stock because it's cheaper. It's only paying about 10% of the cost of the investment. So I would say this kind of product may work for US market. Volatility is still there, I would say, in stock indexes. While for commodity, since tariff is coming in, so that will be uncertainty.
Okay.
So that part I would say will be more revolution in new businesses.
Yeah.
So maybe they will have some new R&D, and some product may need lesser raw material instead of instead of like now they need like such product to produce such thing, or maybe I could find some substitute in order to use this product. So I would say there will be more commodity raw material might have
Some
might
impact.
stagger a bit.
Oh,
So probably we see how it happens. We
Yeah.
see how it happens, because back in first administration, commodity is die down. They die down in commodities. So because of the tariff. But however, we see how China react to this and what kind of policy
They are going to
they are going to implement, or what kind of tactic they're gonna
Yeah.
use. Because the last round, how they do is they come to Malaysia. They come to Malaysia to become one of the to become the importer.
Yeah.
So and lately we actually see a lot of Chinese actually come over to Malaysia to see business opportunity as well. So we shall see what kind of revolution in the market.
Okay. So if there's no further question, oh, there's another question from the floor.
Sorry,
Yeah,
I don't know what Kenneth think about the.
Okay. Yeah, what can you share some of the potential market from this market impact from this Trump administrative?
I think previously during my session I've already showed the graph detailing like the movement of the KLCI and also the US market during Trump presidency 1.0 back in 2018 and so 2019. We may be seeing some volatility whenever like Trump tweeted there is a new tariff being imposed. We may be seeing a knee-jerk reaction or knee-jerk selling pressure to the markets, but eventually markets may likely to see a recovery as investors focus onto the corporate earnings again.
Okay. Thanks for sharing, Kenneth. Okay, we have another question from the floor. Do you still expect construction and property development sector to do well in 2025 and 2026 in Malaysia? How about F&B and consumable sector? I'll pass this question to Kenneth.
Okay, in terms of construction and property development sector, we are still overweight into these both sector, but we do not expect these two sectors to replicate what they have gone through back in 2024. So we expect, while gains are still on the cards, we expect it will likely to be very much measured. We think that fundamentals should really much of or more or less priced into their stock prices, but still we do not discount that possibility of upside are still on the cards. But gains like would likely to be very much measured or gradual at this point of time. We need to see another potential new developments to kick in to drive these two sectors higher. In terms of the
F&B and consumable sector.
For F&B and consumable sector, I think it will likely to remain fairly challenging. There are still investors will likely or consumers will likely to continue to grapple with the high cost of living, given that the price of goods and services may likely to stay elevated. However, we think that there's green shoots of a recovery at this point of time, given that the potential measures being dished out under budget 2025, whereby that there is the progressive wage policy, improve gradual increment in the increase in the minimum wage
And civil servants.
for civil servants as well. Most of the part of the consumer sector players are also riding onto the low base effect. Last year we did see some decline in the financial performance. So this year we may be seeing some small uptick or potential recovery in certain consumer related stocks as well.
Okay, thanks for sharing, Kenneth. Do we have any more questions from the floor? Oh, okay. So we will post a comment in Facebook for the link for evaluation or feedback later. We would like you to click on the link and add the Facebook comment and fill your comments on it. So
What's the result?
Okay, so I think that's all from our session. So if you want to earn more pocket money for Chinese New Year, you could refer to some of our reports in Apex Academy, and also do contact us if you have any queries on derivative or equities. Our CSR will assist you from it. Hope you have a prosperity year, and thank you for joining us. We hope you find this session valuable. We hope to see you again at the next market outlook, which is second half around July. Thank you, and we wish you have a happy weekend and early happy Chinese New Year. Thank you.
Thank you.
Thank you.